Hello everyone, welcome to JAIIB CIB Prep, and today onwards we'll start with our subject PPB. We start with Unit 1, Module A, Unit 1. In Unit 1, we'll look on to the requirements to be called a bank, what are the different relationship a bank enters with its customer, who is a customer, and then we'll look on upon the different type of relationship which exist between a bank and its customers. So, debtor creditor, creditor debtor, bank as a trustee, bailey bailer, agent principal, SLSC, indemnified, and what are the different deposit products which bank offer? What are the services which bank offer to its customer and investors? Then we'll look upon some questions which are provided in Macmillan book and some practice questions, right? So, without further ado, let's start with this unit. Number one, requirements to be called a bank. Where it has been defined, a bank has been defined under Section 5B of the Banking Regulation Act 1949. A bank is nothing but a company that accepts money from the public and with the pure intention of lending it or investing it. Now, the bank cannot use this money for any other purpose. The money can be repaid on demand or after a certain time. So a person can keep the money in its savings bank or current account, and it can withdraw its money on demand, or it can keep its money. A customer can keep its money in fixed deposit, recurring deposits, and can withdraw it after a certain point of time. Now, what are the essential requirements to be called a bank? Number one, accept bank should accept deposit only for the purpose of lending or investment. Now, if a company accepts money and uses it to manufacture goods, it is not a bank. All right. A real bank uses your money to give loans or invest. Number two, the deposit should be from public. Say if an organization accept deposit only from its member, then will not call that organization, that company a bank. For example, Nidhi or cooperative societies. So a bank must deal with general public. This is important. And number third, deposit must be in the form of money. Now, a person cannot come to the bank and say that I want to deposit my watch. No, a bank will accept deposit only in the form of money, cash or digital money, and not any other kind of goods or services. Now, a company has to be registered under Companies Act, and a license is required by RBI for using the term bank, or for any company to call themselves a banking company. Say when you put 10,000 rupees in fixed deposit, you can withdraw it after a term. So the money has to be repayable and withdrawable. In a savings account, you can withdraw any time using check or your ATM card. Now, who cannot be called a bank? Number one, money lenders cannot be called as bank. Money lenders, say sahukars, so they lend their own money and they are not organized companies. So they don't accept deposit from public. uh, they are not open to the public. They are not company. That's why they are not. They cannot be called as a bank or a company giving loans. But accepting deposit from only its members, then that company cannot be called a bank. See, if a company gives loan but does not take deposit from public, then it is not a banking company. This was illustrated in Mahalakshmi Bank Limited case. Again, there are certain other activities which bank can undertake, and they are provided under Section 6. So, Section 5 defines the term banking. It is a definition clause, definition section, and then Section 6 uh, permits a bank some activities. Like, what are those activities? Like collecting checks and bills, safe custody of valuables, issuing drafts, letter of credit, foreign exchange services, or providing safe deposit services. Modern services are also provided by bank. Say wealth management services, bank do sell mutual funds, right? Insurance, tax payments, stamp duty, stock market services, factoring services, venture capital funding. So these are some of the modern services which bank provide. Now let's move forward to banker customer relationship. So we have understood what is a bank, what are the requirements for a company to be called as a bank. Now who's a customer? So there is no legal definition of a customer, right? There is no legal definition, but customer is someone who has an account with the bank. Say you go to a bank, you go to HDFC Bank, and then you want to open your savings account. So we call you a customer. You becomes a customer. Now earlier there was a view that a long relationship was required in order to call someone a customer. So this was known as duration theory. So earlier, only someone who has dealt with bank for a while was considered a customer, and this was propagated by Sir John Paget. But this view was rejected. Um, no, a person who has deposited the money and bank has accepted uh, the money, then that person will be called as a customer. Now, even a person say who opens an account today itself is a customer. So this view was taken by Kerala High Court in the case of Central Bank of India versus V. Gopinath Nair. So earlier, what was the view that a long relationship was required in between a bank and a person in order to call him a customer. But now, even a person who opens an account today itself is a customer of the bank. And a customer need not to be a company or need not to be an individual. A customer, a company can be a customer, a firm can be a customer, government department or trust can be a customer. And according to KYC norms and Prevention of Money Laundering Act, a customer includes anyone who has account or business relationship with bank. Say a company opens a current account, it becomes a customer. A beneficial owner, the real owner is behind the scene. A beneficial owner is the person on whose behalf someone is maintaining or doing transactions. Say if you ask another person to do transactions on your behalf to maintain your account on your behalf, then you are the beneficial owner, and that's why we call you a customer. People doing high risk or large transactions are customers or clients of intermediaries like brokers or lawyers using the bank for their clients. So the client is known as the customer, and people who are doing high risk or large transactions, say you transfer 20 lakhs through a wire transfer. So even though there's no account with a certain bank, the bank will treat him as a customer for compliance reasons. So there's a person A. Now this person transfers 20 lakhs through wire transfer. Even though person A does not maintain an account, say with ICICI Bank, but still ICICI Bank will treat Mr. A as its customer. Now let's move forward to different kind of relationships that exist between a bank and its customer. Number one, debtor creditor. So when a person deposit money, say you deposit your money into a bank account, what are you doing? You are lending money to the bank. So you are the creditor and bank is the debtor. When a person deposits money in bank, now in this case bank becomes the debtor because bank has an obligation to repay your money and you became the creditor. In simple terms, you have done nothing but you have lent your money to the bank. Now there are some key features that the bank can use your money as it sees fit, and the bank will not automatically return your money. You have to demand it, and bank will not provide you any kind of collateral or security. So you cannot ask bank uh, to mortgage their building in order to provide you security or give you some kind of bonds or something. No, the bank will not provide you any kind of collateral or security, and the limitation period starts only when you demand your money. Say you deposit 1 lakh in your savings account, the bank may lend this money to someone else, and if you need the money, you must withdraw it yourself at the reasonable hours. You cannot go to a branch at say 12 a.m. in the night and you ask for money from the branch manager, or you cannot just knock the door of the branch manager at the middle of the night. You have to go to the bank at certain hours on certain days, and then you will be able to withdraw your money. So the bank won't offer you unless you ask for it. Number two, creditor and debtor relationship. Now, this is just opposite of what we have understood in the first relationship. Now, these are the key features that I just explained to you. Now, when bank lends money, say when you take a loan from bank, the bank becomes the lender. So, the person who lends is known as the creditor. Creditor is nothing but the lender. Okay. So, the lender is the creditor and you, the borrower, becomes the debtor. What are the key features? You must repay the loan with interest. You must may sign certain documents and offer collateral security. Okay. Say you take a car loan of 5 lakh rupees from bank. Now you owe this money to the bank and you will pay EMIs over the years to repay your money. And then this case, the bank is the creditor and you are the debtor. Just a minute. Okay. So bank as a trustee. What do we mean by trustee? If you hand over your valuables or money for a specific purpose, and in this case, the bank as a trustee, meaning to say it will safeguard those valuables and will use only for that purpose. So, when you give 50,000 to the bank to buy shares, the bank buys and the bank buys only a part of it, then you are entitled to the unused amount. And in this case, the bank was your trustee. So, trustee is a person who holds or administers property for the benefit of a third party. In this case, the bank holds your valuables or your money for a specific purpose for the benefit of its customers, right? The trustee are obligated to make decision in the beneficiary's best interest. So, if you have handed over your money, given the specific directions, the bank has to use your money only for those directions, and if bank fails to you know comply with those directions, then the bank will return your money. Bailey bailer relationship. Contract of bailment has been defined under section 148 of the Indian Contract Act. What does it mean? Say if you give your valuables to the bank for safekeeping, in that case the bank becomes a bailee and you are the bailer. The bank must take reasonable care. If the items are lost due to bank's negligence, it must compensate you. Say you deposit, for example, you just deposit your property documents in bank safe custody, and if the bank loses them, then the bank will be liable because the bank is acting as a bailee. So when a customer deposits certain valuables, uh, documents with the bank for their safekeeping, the bank becomes a trustee, also a bailee, and the customer becomes the bailer. So this will be asked in your exam. These relationships uh, will come in case study forms or in statement forms. So be attentive. Agent principal relationship. The bank can act on your behalf to perform tasks like paying your bills, collecting checks, making payments, and in this case, you, the customer, are the principal and bank is your agent. So, principal is a person who delegates authority, and when you delegate a certain authority to the bank, like bank can pay bills on your behalf, bank can collect checks on your behalf. So, in this case, you, the customer, is the principal, and bank becomes the agent. Say you instruct your bank to pay your electricity bill, your phone bill for every month, then in that case, bank is acting as your agent. Lessor lessee relationship. So a bank gives locker on rent. In that case, bank is the lessor and you are the lessee, the tenant. Where it has been defined, the term lease, lessor, lessee, it has been defined under section 105 of the Transfer of Property Act. Now, when bank gives safe deposit lockers, the bank becomes the lessor because bank is allowing you to use its property, and for the usage you are paying some rent to the bank. You are paying the premium to the bank. Now bank has certain responsibilities. If there is any loss, theft, or if there's any negligence involved on bank's part, then the bank will be liable. But if there is any loss due to natural disasters or act of God which are beyond bank control, then the bank will not be liable. Any loss arising due to natural calamity or act of God, for those reasons, bank will not be liable. Bank has uh, bank has to take reasonable care of your belongings which are put in the locker, but for act of God or natural calamities, the bank will not be liable. Bank will be liable if there is any employee fraud or there is any fire incident, any theft, robbery, dacoity. In that case, bank will be liable. And what is the bank's liability? The bank will be liable to pay up to 100 times of the annual locker rent. All right, 100 times of what? The annual locker rent. So you rent a locker for 2000 per year. If the bank's security fail and your jewelry is stolen, the bank must pay 2 lakh rupees if it's at fault. 100 times of your annual locker rent. Indemnifier indemnified. Section 124 of the Indian Contract Act defines the contract of indemnity. Contract of indemnity is nothing but where one party promises the other party that I will save you from the loss if any loss has been caused to you by the conduct of the promisor himself or by the conduct of any third party. So, in this case, the customer is the indemnifier and bank is the indemnified. The customer promises to compensate the bank for any loss if something goes wrong. Usually in special cases, say a customer lose a demand draft and ask the bank to issue a duplicate, then the customer must sign an indemnity form agreeing to repay the bank if someone uses the original draft fraudulently. right? So these were the different kind of relationships which exist between a bank and the customer. So this is a summarized table. It is important for your exam point of view. Do give it a quick read. So when you deposit in the bank, bank becomes debtor, customer becomes creditor, loan, bank becomes creditor, customer becomes debtor, safe custody, bailey bailer relationship exists in locker. When a locker has been given on rent, the bank becomes the lessor, the customer becomes the lessee for collection of check. The bank becomes the agent, the customer becomes the principal. So this summarizes bank customer relationships. Now let's move forward to the different deposit products or services which bank offer. So when you put your money in bank, that's called a deposit. Depending on how long you want to keep it and the type of account, the bank may pay you interest, a return on your money. So there are two different kind of deposits: demand deposits and time deposits. So demand deposits you can withdraw anytime you want. Current account, savings account are the example of demand deposits. Do keep in mind that for current account, bank don't give any kind of interest. The shopkeepers open a current account to pay suppliers. Receive customer payments daily. So this is example of current account. A salary employee saves a portion of salary in savings account and earn interest. The second being time deposits. You put your money for fixed period and get interest. Now, for time deposits, you usually cannot withdraw early without a penalty. Fixed deposits, recurring deposits are the examples of time deposit. In fixed deposit, deposit a lump sum of money and earn regular interest. In recurring deposits, you add money on a regular intervals. You deposit a fixed amount every month and interest is paid on maturity. Now let's move forward to the services which bank provide to its customer and investors. In deposit products, bank provide different deposits to NRIs, which we'll see in our upcoming units. Say NRO, NRE, FCNR. So these are different kind of accounts which a bank provide to non-resident Indians. Services to customer and investors. Number one is merchant banking services. So merchant bankers are companies which help other companies. So merchant bankers help other companies to raise money from the public or private investors. They offer services like they help in initial public offering, they prepare project report, market survey, they do a feasibility study, they take care of getting approvals from SEBI, stock exchanges, they appoint brokers, they help in underwriting services. They appoint registrars, advertisers, marketing. They market the public issues, say roadshow ads, and they help the company to list their shares on exchanges like BSE, NSE. So when say for example when Zomato launches IPO, merchant bankers help with paperwork, advertising, and listing of its shares. So merchant bankers that they facilitate capital transfer from investor to corporation or government. So they provide capital from the person who requires the capital, from person who has excess money to the person who requires the capital. Right? They aids in IPO, FPOs, private placement. They assist in preparing project reports, market survey, obtain regulatory clearances, help in underwriting services, distributing prospectus, applying to stock exchange, and the other services which I stated earlier. Number two, lease financing. Lease financing means giving something on rent. So instead of buying, you rent something. It's as simple as that. The company who uses the asset is known as the lessee. And the company who gives the asset on rent, who actually owns the asset and give it on rent, is the lessor. It has been defined. The lease has been defined under section 105 of the Transfer of Property Act. Say a bakery needs an expensive oven but does not want to buy them. So what the bakery does? Bakery leases them from a company and pay monthly rent. So what are the advantages to the lessee, the user? They don't need to buy the costly machines. The lease payments are business expenses, and um, it does not affect the company's loan or financial position. But at the same time, the lessee never becomes the owner, and the lessee can only use the asset for agreed purpose. Asset can be taken back if terms are broken, and if lessor goes bankrupt, asset may be seized. So these are some of the disadvantages of the lease financing. All right, you have to keep that in mind. Plastic money is nothing but money which you use. Uh, Plastic money means using cards instead of carrying cash. So these include credit cards, debit cards. So let's understand it one by one. Charge card lets you buy now and pay the full amount later. It is similar to credit card, but the only difference being you have to pay the whole amount for a charge card. You cannot just pay your minimum amount due and move forward. No, that is not the case with charge card. You have to pay the full amount. No interest is charged if you pay on time, but late payments attract a late fees. And there's usually no fixed spending limit on charge cards. So American Express charge card is an example of charge card. Credit cards, you can buy things on credit, pay later. Uh, but again, you don't have to pay the bill in full. You have the option of minimum amount and pay the rest in parts. Say HDFC Bank credit card, ICICI Bank credit card, you bought a phone using the card. Now you can convert them into EMIs. You can just pay the minimum amount due, but keep that in mind that if you pay a minimum amount due, then you have to pay interest on the outstanding amount. Debit cards. So debit cards, the money gets directly deducted from your bank account immediately after the purchase. It only lets you spend what you already have. ATM cards. ATM cards are used to withdraw money from ATMs. Now debit cards are also act as ATM cards. Prepaid cards. So you load money in advance and then spend from it. It can be gifted or used by someone else. Amazon gift card loaded with 1000 or a Metro card. So these are examples of prepaid card. Co-branded card, a credit card issued jointly by a bank and a retail company. Say SBI and Indian Oil Corporation card, ICICI and Amazon credit card, Flipkart and Axis card. So these are the examples of co-branded cards. You get special discount, reward points at the store, um, but it can also work elsewhere. Electronic payments, you can pay money via smartphones, internet banking, you use payment apps, digital wallets, and cards are also issued in electronic form. Example, Google Pay, Phone Pay, Paytm wallet. So you can pay directly from your phone. Remittance services. Remittance is sending money. The bank now uses fast electronic systems instead of old methods like drafts or mail transfers. Now bank uses NEFT, transfer money in batches within few hours. RTGS, real-time transfers for big amount, 2 lakhs or above. IMPS, instant money transfer, it is available 24 into 7. UPI, money app-based transfer using UPI ID. AEPS, money transfer using your Aadhaar number and fingerprint. And then there's NACH, which used for bulk transactions like money or pension payments. Bank also serves as a distribution point for providing various government services like PPF, NPS, Sukanya Samriddhi, Senior Citizen Scheme, Gold Bond, Jan Dhan Yojana. So these products are offered by the bank under one roof, and for offering these products, bank generally charge commission from the government. So bank help people open account or invest in government savings and pension schemes. Then we have third party products which are sold by the bank like demat accounts to hold share electronically, trading accounts, mutual fund, insurance, life insurance, vehicle insurance. They are sold by tie-ups. Safe custody and trusteeship service. Bank provides secure service to keep valuable safe and handle funds responsibly. For example, safe custody, keep property papers or jewelry at bank. Safe deposit locker, rent a locker for valuables. Escrow account, when it is used when money is kept in trust until certain conditions are met, like in property deals. And then there's trusteeship or executorship. The bank can manage your money or will as a trusted representative. Now let's look on to questions which are provided in Macmillan book. Number one, principal function of bank is or are accepting deposit, yes. Lending and investing, yes. Non-fund business and remittance service, yes. So all of the above is the correct answer for this question. When a bank lends money to the corporate person, the relationship between them is that of creditor and debtor. So B is your correct answer. What relationship is created when bank collects a check in clearing? Very simple. We have just understood it. So it is agent and principal. Demand deposit are those which can be withdrawn on demand. So C is your correct answer. Then merchant bankers are financial brokers, financial intermediaries, credit appraisal, underwriter, all of the above. So merchant bankers are financial intermediaries. So B is your correct answer for this question. Now let's move on to our practice questions. Number one, which of the following entities are considered as bank? Money lenders? No. An institution accepting deposit of money with the purpose of trading? Trading? No. Bank can accept deposit only for the purpose of lending or investment. Cooperative societies that accept deposit from their members? No. So D is the correct answer for this question. A customer, Mr. Sharma, has rented a safe deposit locker from SBI Bank under an agreement. Which of the following best describes the type of relationship created between the bank and Mr. Sharma? In this case, the relationship here is that of lessor and lessee, or the licensor or licensee. So A is your correct answer for this question. What is the primary difference between a credit card and charge card? Credit cards do not charge any annual fees, while charge cards do. Charge card require the full payment of the outstanding amount, while the credit cards allow partial payments. Yes, this is the correct difference. But let's read other options as well. No late fees is charged in charge card, while credit card do. None of the above. So B is your correct answer for this question. Time deposits are for a period ranging from dash to dash period with or without reinvestment plans. So for this question, D is your correct answer. It usually varies from 7 days to 10 years or 120 months. Mr. Arjun, a retail shop owner, recently deposited 7 lakh rupees into his savings account at HDFC Bank. Over time, he relied on HDFC Bank to keep his savings secure while earning interest on his deposit. One day, Arjun decided to expand his business and approached the bank for a loan to purchase new inventory. Based on this scenario, what is the nature of relationship between Arjun and HDFC Bank when HDFC Bank granted a working capital loan to Arjun? So, in this case, Arjun is the debtor and bank is the creditor. So, A is the correct answer for this question. Why? Because bank granted a working capital loan. The bank becomes creditor and Arjun becomes the debtor. So, A is your correct answer for this question. Meera is the owner of M&K Enterprises. Due to frequent business travel, she often needs a secure place to store important documents, bonds, and valuables. Recently, she entrusted XYZ Bank with certain securities and valuable documents for safe custody. What role does the bank assume when it accepts valuable documents and securities for safe custody? And number two, Mira later discovered that the content of a locker were missing, and an investigation revealed that a fraud was committed by Priya, an employee of the bank. As per regulation, what is the maximum liability of the bank in such cases? So in this case, bank assumes the responsibility of bailee, number one, and number two, the maximum liability of bank in such case will be 100 times of the prevailing annual rent. So D is your correct answer for this question. Which of the following statement are correct in relation to merchant bankers? They help a corporate in IPO or FPO. Yes, this is correct. They assist in obtaining regulatory clearances from SEBI. It is also correct. They assist in printing and distribution of prospectus application form to brokers or broker runner. This part is correct, but fail to assist in underwriting of public issue by financial institution or broker. No, they help in underwriting services. Hence, this statement is not correct. They do not help with private placement of debt. No, this is also not correct. They do help in private placement of debt. Hence, option D is your correct answer for this question. Which of the following statement is not true about lease financing? The lessee is entitled to write off capital cost against it a taxable profit. No, the lessor is entitled to write off, not the lessee. So this statement is not correct. Lease charges are accounted for as revenue expenses in lessee's book of account. This statement is correct. Lease financing means leasing out the capital asset owned by an institution to another company against payment of monthly rents for assets consumption or use. This statement is also correct. In a lease, the lessee of the equipment eventually becomes the owner of the asset. No, the lessee does not become the owner of the asset. So A is the correct option for this question. The question asks for statement which are not correct. Statement 1 and 4 are not correct. Hence, option A is the correct answer for this question. Canara Bank renders ancillary services like regularly paying electricity bill, telephone bill, or insurance premium on behalf of Mahesh, one of its customers. What is the relationship between them? In this case, when a bank is acting on behalf of its customer, the customer is the principal and bank is the agent. So B is the correct answer for this question. Bank is acting as an agent in this scenario and the customer is the principal. In banking, relationship of indemnifier and indemnified occurs in transaction of shares given for sale, no mortgage, no duplicate demand draft, fixed deposits, receipts, etc. Yes, this is the correct answer for this question. Money deposited but instructed, not given for its disposal. No, C is the correct answer for this question. So I hope you enjoyed the session and get the clarity of what unit 1 is all about. From this unit, you can expect two questions, approximately two questions in your exam. It might be three. Uh, let's meet in next session. We'll discuss unit 2 in next session. Till then, bye bye and take care.